Good evening, everyone, and welcome. Welcome to tonight's event. It's a partnership, again, with IWG PLC and with Richard Morris. My name is Shalini Kempker. For those of you that don't know me, I'm the founder and chief executive of E2E. It stands for Entrepreneurs to Entrepreneur Exchange. And tonight, we're in conversation with one of the most influential people in the UK in tech. And he's one of the most successful investors in the UK in technology. It's the gentleman that I was just telling him how charismatic he is, and that's Tom Teichman.
That's last week.
Thank you very much for joining us. And Richard, thank you again for partnering with us. So the tech industry is perhaps the only industry, I think you'll hopefully agree, that has actually thrived during this very difficult pandemic. And many other industries have struggled, whereas the tech industry has a lot of our members in tech, they've done very well. The unfortunate demise this week of the former king of the high street, Sir Philip Green's conglomerate of the fashion brands in Arcadia, and in addition to what's happening with Debenhams, I think the important lesson learned there is that we can't rely anymore how much the world has changed on bricks and mortar. We have to be digitally agile, and perhaps no one recognizes this probably more than Tom Teichman. He is, as I mentioned earlier, one of the UK's most successful serial investors in digital startups. Tonight, Tom's going to talk to us and give us his insights into the tech explosion of the recent years, what it means for British business and entrepreneurs, and now, hopefully, beyond the pandemic. So he's going to share with us his experiences. I'm going to have a chat with him, and he's going to share his experiences of building and scaling tech businesses. So as we emerge out of this second lockdown, which I'm relieved in London at least started yesterday, we're reminded that 2020 has been a very, very tough year. And 2021, fortunately, is looking much more hopeful. And I think the vaccine is giving more confidence that we will be able to hopefully have a little bit of a boom out of this difficult situation. And I'm hoping we will see that the cycle of lockdowns will come to an end as the vaccine is distributed throughout the country. One more thing that's changed irreversibly this year, in my view, is that companies are much more agile in using technology, and they've pivoted. A lot of companies have pivoted to a digital first strategy. And as shops have closed and meetings have ended in the usual way, we're doing things very, very differently. What this means for the technology sector is still unclear. So I'm delighted that, Tom, you're going to talk to us and hopefully give us a little bit of insight in what you think the future holds for the tech industry. So in terms of the format of this evening, I'm going to introduce Richard in a little while, and he'll talk you through IWG and some of the great things that they've been doing in our partnership. Normally, this is where I'd leave it about Richard, but this is actually our last event of 2020, and I really want to say a very big thank you to him and to IWG PLC overall. As I mentioned, 2020 has been one of the toughest years, and including for us, it's been very, very tough. But Richard, it's because of you, it's because of the support of IWG that we've been able to support our 23,000 members. And, we've been able to amass entrepreneurs from 35 different countries. We've had over the last, since September, we were looking at the data, over 2,000 unique founders just since September to Christmas, register for our events and get connected. So the power of IWG is not just supporting E2E. What IWG has done through partnering with us is actually you've made a massive difference to UK entrepreneurship. So together, we've provided, I think, is a space for entrepreneurs to support each other both digitally and through your co-working hubs and through your flexi packages. And I don't know if many of the people on our webinar, they were on the event last time, but we did for the first time our first online pitching event where we had 3 companies looking for funding. We've raised over £1 million just from that event for those companies. So that's a tangible fact of how this has made a difference. So none of this would really be possible without the support of yourself, Richard, and IWG. So I want to say thank you, and I'm a bit sad that this is our last event because I can see the power of what we've done together has made a massive difference. So I'm looking forward to next year, and just to say thank you. So moving on, before we hear from Richard, I want to just do a short poll, and I'm going to ask Stephen if he would put up the poll, and it'll run while I'm speaking, and then I'd be delighted to have an interactive discussion with Tom. So in terms of how we would do that, what we'll ask you to do during the interactive discussion is to raise your hand. And when you raise your hand on the chat function, we will then put the camera on and ask you to chat to Tom. So I'm not going to read the questions today. I'm just going to let you have a look through the questions whilst I'm speaking and start to answer them. So E2E, as many of you know, we're all about enabling extraordinary entrepreneurship. We do this in a variety of ways, but hopefully you'll agree now that we do much, much more than put on events. We have become more like a Match.com for capital, helping businesses find the right investors, the right talent, the right technology, and all of this is available today at mates rates. So I think this is one of the big things that we're looking at is how to keep the costs low and make it affordable. My personal vision is to make sure that Britain is the best place in the world to start a business and to scale a business. And I'm hoping that the Chancellor does not increase capital gains tax in order to keep that going. And I believe that entrepreneurship will not only help us become a stronger economy, but in terms of society, a stronger society. So as a part of this mission, as many of you know, that I've been working with Maurice Ostro on the Business Action Council and Lord Bill Moria. 3 things that we've really done well is we introduced the flexi furlough, we introduced the short time working directive, and we introduced the bounce back loan. So all of this is designed to protect jobs, reskill workers, and help keep businesses trading. So with our 23,000 members, I just wanted to share with you, together, collectively, you contribute £213 billion to the UK economy. You employ 1.15 million people. Anybody who's on the webinar today who's not a member, who is an entrepreneur running a scaling business, we would welcome you to join E2E. So I will leave it at that. Hopefully it's given you a little bit of a snapshot of us, and I'm looking forward to talking to Tom in a few minutes. And please do fill in the poll. I'm going to move over, if I may. Richard, thank you again.
Thank you, Shalini. Good evening, everyone. I hope that you're all well. I think the first thing to say, just following Shalini's words, are that IWG, International Workplace Group, are very proud of our partnership with E2E. We think this is sort of real kind of natural partnership where we provide this unique physical network of workplaces within which you can find the whole array of different sectors of the economy, different types of business in different stages of their life cycle, from freelancers to small startups through to Fortune 500 businesses. And we think our partnership with E2E works really well. I'm going to talk in a moment about some of the benefits that IWG provides exclusively to E2E members. But before I do that, maybe just say a little bit about who we are and what it is we're trying to do. Very simply, International Workplace Group, we're the largest provider of flexible workspace. Now, there's been a fairly prominent trend over the last 5 to 10 years anyway for businesses to want to be more flexible and use office space in a different way. Technology, of course, was a big driver of making that possible, meaning that people could be more mobile. But I guess none of us in IWG anticipated the events of 2020. And I think it's fair to say that the whole world has been forced to work in a different way. And our view is that that will have lasting impact on how businesses go about providing workspace for their people And already we can see businesses of all different sizes moving permanently to more flexible working styles for their employees. And that is where our network of on-demand, pay-as-you-go workspace plays a really important role in my view. So across our network of 3,500 locations, which we operate under a number of different brands, including Spaces, BasePoint, Signature, Regis. We have these in 1,200 cities in 120 countries around the world. And you can access them however you like, using a smartphone app. You can use your local IWG location by the hour, by the day, or however long or short you need that space for. So it's all about repackaging workspace to make it more relevant for what businesses need today, helps them to be agile, helps them to be flexible, and also will enable these new ways of working that have been accelerated as a result of the pandemic. Now, what we do with E2E, aside from events, all of which have had to be digital this year, but hoping that we can get back to physical events in the second half of next year, we provide E2E members with a number of fantastic benefits to make it easy to get introduced to IWG's network and to use our locations however you would like. First of all, any E2E member that wants to buy one of our products, whether that's a private office or a co-working desk, or maybe a business address, you can have 3 months of your agreement free as long as you sign up to at least 6 months agreement. So that's 3 months free. We're also providing a 10% discount to all of our meeting rooms, our day offices. This is where you go onto the smartphone app and you can book a day office at the IWG location near to your home, avoid the commute, make life easier, get into this new hybrid way of working. 10% off all of our prices to E2E members. And then we're also providing free access to all of our business lounges in the UK. We have 400 locations across the UK in motorway service stations, train stations, airport lounges, shopping malls, as well as your local business park and your local high street. Each one of those locations has a business lounge where you can touch down for a few hours, get some work done, and we're offering access for the next 6 months to E2E members on a free to use basis. So we look forward to seeing you soon and helping you to work differently in the future. And we look forward also to continuing our partnership with E2E. Thank you. Back to Shalini.
Richard, thank you very much. Well, I'm delighted that because the lockdown is released to an extent in London, at least we can start to get people back into the co-working hubs and into the offices and using your flexi packages. And I think it's a real privilege, Richard, to have the opportunity to give our members 6 months free going into the business lounges as they wish, as well as the big 50% discount that you're offering on the 6-month contract or more. So thank you very much, and we really, really appreciate it, as do our members. So I'm going to have the pleasure now of introducing our keynote speaker, and as I mentioned, Tom Teichmann. So it's my huge pleasure to introduce our speaker for tonight, Tom Teichmann. He is one of the UK's most influential people and a serial investor in digital startups. He's got that keen eye for investing in that big thing. So Tom, I'm hoping you're going to share some of the secrets of how we spot the best investments like you have done.
I'm not telling anybody anything.
We're going to try. We're going to try. So he's the chairman of Spark Ventures Management. It's a venture capital company for early stage digital businesses. In 2014, he co-founded, this is a very funky name, the Garage Soho, which is a think tank for tech business, with an advertising king and founder of BBH. Hopefully you've heard of him, Sir John Haggerty. Previously, Tom spent 20 years in investment banking, and he weathered the storm of the dot-com crash. He was the youngest ever member of the Credit Suisse management team, and ended his Citi career as head of European banking for Montreal Nesbitt Thompson. He then made the leap. From banking into the entrepreneurial world and the investing world. Tom was the first backer of MAID, M-A-I-D, MAID, a global giant in business information, and became a full-time investor in floating it on the NASDAQ and on the London Stock Exchanges. He was also the first backer of lastminute.com. So I don't know if you know Tom, but Brent Hoberman, he helped me to start E2E. So he had the fortune of you backing him. You then went on to back him at made.com, then Not on the High Street, Moshi Monsters. I didn't manage to make any investment into Moshi Monsters. Tom was very successful with Moshi Monsters, Cobalt Music, and academia.edu. This is just touching on some of them, so I'm hoping you'll share a lot more of them. He's now got a long track record in backing, chairing, and developing some of Europe's most successful internet technology, music, games, and software businesses. So since his Citi days, Tom has operated hands-on in many small and fast-growing businesses, from startup to trade sales to IPO. His USP, I believe, is combining his awareness of the capital markets and M&A with that of the entrepreneurial, rapidly growing companies with groundbreaking ideas. So I've just scratched the surface of a little bit about Tom. I know he's backed some of our members, which is brilliant to have that knowledge of. So Tom, I'm looking forward to learning about your experiences. So I'm going to kick off with my first question, but I can't see you. Have we lost you for a second? I think we might have lost. Richard, can you see Tom?
No.
No. So basically, I think we might have just lost him for a minute. So whilst he comes back on, oh, there we go. Tom, I lost you for a second. Did you hear the last bit?
No.
I'm going to kick off by asking you a few questions, if I may.
Yeah, sure.
Okay. Would you share? I've touched on your career. Would you start by just sharing with us a little bit about your life journey and how you ended in this position where you are now today?
Well, I started in banking, in investment banking, and quite a while ago. Then in the mid-'80s, believe it or not, I came across one of the first online information businesses, one you mentioned, MAID, M-A-I-D, and I got involved with that. As a banker, you don't know much about how companies work, but I spent 10 years on the board, and then we floated that in the early 90s, and then I sold out. It was the first business. It was before the internet. It was when information was shared on mainframes with direct connections. There was none of the stuff you see nowadays, before Windows. So I learned a lot as the world developed on how to keep up with new trends, and then how to actually take a company like that public. So it was one of the first to go public. There was a high-tech company in London and became one of the world's biggest online information businesses. So that's how I made the jump.
Okay, and then tell us about, your investing philosophy. What are the personal qualities that you look for when you're picking? How did you know at that time to invest in lastminute.com, for example?
Well, a guy called Brent Hoberman and his partner, business partner, Arthur Lane Fox, walked into my office. By then I'd set up my own little fund because I'd sold out of my first public company. So I thought, well, I've got some capital now, I'll start investing in things. They walked into my office, and within 10 minutes I was knocked out by them. And by their interaction, by their speed, they'd already got the name lastminute.com, and I thought that was a great name. And their argument that it was a fantastic area in which to sell seats and hotel rooms. But little did I suspect what a difficult journey it was going to be. We were very lucky. We raised a lot of money quite quickly, but it was the quality of the people and their attention to detail and their commitment to get things done that was amazing. Like they called British Airways, I think 300 times to get seats to sell on last minute. They turned us down over and over again. But in the end, we got there. And in those days, there was no there was no AWS, there was no Google Cloud. So everything had to be built on servers and then shared from the servers it was far more difficult. There was Windows, but it was hard. But it was their quality, them, that really made me sit up, and the name. And that's what I really look for, is the quality of the people, their commitment, the fact that they left their jobs to do this, the fact, just their energy, and you know, what I call the eye of a lizard, the lizard eye. So you're very awake to things going on around you. You're not sleepy and you're not academic. Doesn't matter whether you've been to business school or not. Doesn't matter whether you're highly educated or not. You can have this just by pure animal instinct. That's what I'm for.
Okay, and obviously those are really good qualities in people, and you see a lot of people who are like that. But how do you go that one stage deeper, Tom, to know that it is actually not just a charismatic person with a visionary idea, that they've got the gravitas of personality, they've got the gravitas of tenacity, and the support infrastructure to make it happen?
Well, I think it's the way they speak to you. It's the way you watch them interact with each other. It's the way that they talk to their clients, talk to their staff. And I always think of them when they come in, I always think, in 10 years' time, will I be able to present these people to investment banks like Goldman or Morgan Stanley? Are they that kind of quality? Because fortunately, because I've been in investment banking, I know what to look for in that area. So I always think, well, they're pretty good at this small business idea, but can they grow? And that's part of the assessment, an important part of the assessment.
And how do you do your due diligence around the idea? So how do you know that the idea has got the real legs to it?
Well, I listen to them, and often the part of the tenacity.
Mm-hmm. Tom, have we lost you? I think, guys, we've lost Tom for a second. So just give us a couple of minutes. He should be coming back on. But whilst he's coming back on, may I ask everyone to think about their own questions and raise their hand?
Sorry about that.
No,
I've changed the Wi-Fi. Sorry.
Okay.
Yes. So it's the ability for these people to switch. So Moshi Monsters was a classic idea. I met Michael Acton Smith when he was about 22, and he was making these chess games where you won. When you won, you got an extra shot. It was chess shots. And I just thought he was brilliant, original, and bright. And then a few years later, he came up with the idea of a game which was really difficult. It was called it was a card game that was really hard, and that didn't really work. But he switched to Moshi Monsters and came up with the whole concept, designed the players, and designed everything. And that's the sort of talent that I look for, and that he had. You know, flexibility. The original idea didn't work, but the new idea, get onto it and do it. And that's the sort of people you need.
Okay. And of the companies that you've backed, Tom, which have been the most exciting? I mentioned just a few of them, and which have been the most difficult as well.
Well, I think that Last Minute was obviously very exciting, and MAID, that I mentioned before, MAID, the business information company, was very exciting because it went public. That gave me the first chance to take an investment of my own public, with a great team, by the way. And then the other ones that were great were Last Minute, which was very enjoyable because when we floated it in 2000, so that was 20 years ago, in the last height of the last tech boom, we floated it in the middle of March 2000, and NASDAQ crashed the week after and went down from 5,000, I think, to 2,000. So our timing was great and terrible. Great because we raised a lot of money, and it was very exciting to sit there watching, you know, Goldman Sachs, UBS, and Morgan Stanley bidding for our business and walking into the room and saying, the demand for your deal is huge. So we were out looking to raise 120 million pounds, and they walked in the room and said, well, you know how much you've raised? Have a guess. 4 billion. We raised 4 billion. We had orders for 4 billion. I mean, when it opened trading, the price went flying, and that was a great moment. Another great moment, yeah. So there have been quite a few. Cobalt, which is a music publishing business. So the music publishing business was very difficult for owners of intellectual property, for the writers and the composers. And so we started that from zero, and that's now become the world's biggest independent music publisher. So I'm very proud of that. And yeah, despite me being chairman for 10 years, it worked very well. And it got investment from Google, from the Dell family, all sorts of very well-known people. So there have been several quite exciting things, but there have also been some pretty pretty difficult things. Hasn't all gone well. You know, we designed some very early high-tech ways of transporting information faster and using video more intensively. We invested a lot of money in that, and that took years and then didn't work. We had another one where we did the same. It was a company that we sold to Ericsson in the end for accelerating video, and that worked, but that took 15 years. And after 15 years, we only got back what we invested. We put in 15 million and we got back about 16 million after 15 years. And at one stage it was worth zero. So that was very fortunate.
So go through that one again. So what happened there exactly? I'm sure everybody will want you to go into a bit.
So it was a video accelerating technology. It was British, and it was very, very clever. It came out of a university. The team were good, but they weren't that commercial. And we kept piling money in, thinking it'll work. And in the end, we put in 15 million pounds, but the sales just weren't coming. And then suddenly they started to pick up after 10 years. And then we sold it after 15 years to Ericsson, because it was a very specialist piece of technology, and they were the leaders in that field for accelerating digital images. Yeah, but there have been lots of other, you know, difficult deals, but some more great ones. I mean, Made.com, which you probably all know, came from a company that we started early on, which was called MyDeco.
Yes.
Now, MyDeco didn't work. It was, if you all know Wayfair, which I'm sure you do, Wayfair is now worth, I think, $30 billion. It's quoted on the stock market in America. And we had that idea, 15 years ago, but it was far too early. You know, we didn't have these stories.
That was you and Brent as well. You and Brent started.
Yeah, well, it was Brent's idea, and I'd already backed him last minute. So I backed him again, and we put in quite a lot of money with a lot of famous investors. And we all thought, lovely, this is going to be brilliant. This is going to work again. But it didn't for a long time. And because we were trying to do 3D images before its time, there was too much need for storage. There was no AWS. There was none of that stuff available. So we had to buy servers and store things, and you couldn't buy ready-made bits and package them up. And it was terribly difficult. There were no apps. And so in the end, we struggled on. And then we had the idea, or somebody came to us with the idea of building up a company, which is now Made. It was Made.com then. And he was a very bright guy who'd done it in France. And we thought, yeah, well, this guy is really bright. He's really, really on it. And he actually bought the name for a lot of money early on from his own pocket. So it showed commitment. He'd done it before. His energy was fantastic. And so we backed him. And what we did was we gave him some of our images. We gave him some of our people. We gave him an office space, and off he went. And now it's a company that turns over, you know, hundreds and hundreds of millions. And it's a very well-known brand. But that came from disaster, came success.
Yes. Yeah. And this might be one of those tricky questions you don't want to answer, so don't answer it if you don't want to. But how did you make your first cash? Was that in when you were on the board of the company that you floated?
Yes. So I'd been in investment banking, and in those days, investment banking was paid okay, but not like nowadays. And so I was always looking at ways of getting out some capital. So I took the risk and actually borrowed against my home to invest in Made. And then, having been on the board for 7 or 8 years, when a window opened in the early 90s, sorry, most of you weren't born. I thought, wow, this is a great, and our sales were going well. We had the opportunity for about 10 minutes to float the shares on the stock market. And we floated it in London on the London Stock Exchange. And it was a hell of a palaver. And it was very risky because at the beginning, we thought the company was going to be worth 150 million pounds. But we had some really bad publicity just before it was going to float, and some terrible publicity saying investors were shunning our deal, and the price collapsed from 150 to 100. But we still did it. And our banks and brokers stood by us. We did the deal, and then finally we had some worth in our company. But I couldn't sell any shares then because they were only allowing the company to raise money, not the shareholders. But about 5-7 years later, when the business was going very well, I could sell some shares, and then I started my own business, which was New Media Investors, and that's when I met Brent, and that's when I met Michael from Moshi Monsters, and now Calm, all those sorts of people.
Yeah, I mean, he's Michael Acton Smith has done incredibly well with Calm. He's done incredibly well. But if I can make a comment on you, you took a big risk at that time. Of course, you were in investment banking, but to kind of raise money against your house, you took a personal risk that for you
I did.
Paid off. Yeah.
I did, but I knew that in those days, plodding along in investment banking was going to be okay. But you couldn't make real capital. Just doing that, if you really wanted to make capital, this was the way to do it. And quite interestingly, having been on the board of the company for 7 or 8 years, we had other investors like the ex-head of BMW UK, head of an ad agency, a guy from the Economist intelligence unit. We had a unique blend of people, and in those days, very exciting things were happening in video technology, delivery, and storage. And so it was just the right time to take a risk. But would I do it again today? I'm not so sure, not with what I know now. It could have gone it nearly went pear-shaped. And one day it was worth 150 million, then it was worth 100 million. And I didn't, it wasn't all mine. I had a small piece, minority piece. But it just showed you how volatile things were. But today on the stock exchange, things are volatile as well. You saw the other day, one big piece of news, everything flew up by 30%. But it can go the other way as well. So it was a big risk, yes.
Yeah, well, we've seen it through the pandemic. I think my own personal portfolio went to like 30% of what it was. It's coming back now, but it really had a hammering. So when you started to invest on your own, did you pool to set up your first sort of venture fund? Did you pool through private individuals? Did you go to institutional investors? How did you build a decent lump sum of cash to do serious investment?
Well, what I did, so I invested my own money, and then I had a group of friends who I brought in. I guess in those days they were kind of super angels, and I had people like the Rothschild family, one of the founders of KKR, and some quite famous people who I knew, and they came in and backed some of my deals, and so that's how I raised the money. But I didn't have an institutional fund until around 2000, when the market was flying. And everything, technology, again, like now, was the flavor of the month. I thought it was a great time to do an IPO. So we IPO'd my company, and off we went, and we raised hundreds of millions. It was really exciting. And we invested in too many companies all over Europe. We had offices in Berlin, in Madrid, in Scandinavia. And one of the lessons I learned there was, don't do too much at once, because you lose focus. And don't delegate investment decisions to people too much, because not everyone's got the knack. Don't use too much of your academic knowledge, but use your intuition. And you can't do that if you're delegating investment to a lot of people who aren't really perhaps that good at spotting winners.
Yes.
Yeah. But that's still a public company. Yeah. That's still a public company. It's now called Gresham House Strategic. And I'm still involved with it. I'm still an investor. I'm still on the investment committee. And that invests in public companies that are almost like private companies. They're big private companies, but they're technically listed, and also in some private companies. And it's got a wider range. It's not just technology. Because one of the problems with a public company, when your investments are in technology, when it's a fund, is that no one knows how to value the assets.
Is that
And
Gresham House? Is that
yeah,
Gresham House?
Gresham House Strategic, yes,
Wow.
yes.
So
Yeah, so that's my old business now, the public company, but it doesn't just invest in tech. It invests in a lot of interesting situations because tech investments are very hard to value, especially if they're pre-revenue, pre-profit. How do you know? And institutional investors don't like it because they haven't got any benchmarks. The only way you can really value these things is based on the last round. And if there aren't many rounds, you just don't know what they're worth. And investors get fed up with it. Institutional investors don't like that.
That's very true. I know there's questions coming in, Tom, so I'm going to ask Stephen, and maybe we could bring on in a few minutes Avnish Goyal. I think we have Emma Hartley. We also have Nitin and Waltrond, and I hope I'm pronouncing your name properly, Walstrond and Suruchi. So we'll try and bring people on. Whilst we're bringing people, I'm going to ask you something else. How do you know when's the right time to personally exit?
Now I always look at exits in a quite an unusual way. I don't look at exits like many founders do and think, oh, my company is going to be worth twice as much or 10 times as much in 2 years or 5 years. I'll leave all my money on the table. To me, it should be a life question. Where are you in your life? How much difference will exiting make to your life as opposed to waiting and it all going pear-shaped? Because the tech market can be very cruel, and something that was worth 100 million can be worth 5 million not long later. We've all seen it. And so I always say to people, think of what difference exiting will make to your life. And that's the way I look at investments. Not just will there be a huge upside going from here, but what will this sale of my investment do for my life now? I don't try and choose the top point. And I usually try to keep some of the company. So if it goes well, I'm still benefiting.
That makes a lot of sense. So you look at your personal circumstances and what your needs are, and then you make that decision. And
yeah.
Yeah.
I recommend that to the entrepreneurs as well, because often they think it's just going to go up. They're on a roll. They've just gone public. I'm not selling any shares. I've had this several times, and I say, don't be silly. Just sell some shares, buy a house, get a flat, pay for your kids' education. Don't just expect it to go up. It's not just a price decision. You need to protect yourself and not expect sunny weather all the time, because it isn't.
Sure. No, thank you very much. That's very, I'm learning a lot myself, so I really appreciate it, Tom. I'm going to move over to Avnish. Avnish, great to see you. Avnish is an investor in E2E. He's also an advisory board director of E2E.
Hi, Avnish.
Lovely to see you.
Hi. Yeah, hi, Tom. It's great listening to your story. I love listening to fellow entrepreneurs sharing their journeys. Sometimes I feel myself with regret of I didn't do this, I didn't do that. Not that I live with regrets, but I had a couple of kind of questions I always love to ask. They're kind of the obvious ones, but Tom, what are you most proud of in terms of what you've achieved, and what's your one either regret or your biggest failure, whichever one you prefer to answer?
Well, I think some of the companies that I've started, quite a few of them, maybe 7 or 8, have gone on to be unicorns. Whether it's Merger Market or Last Minute or Cobalt Music, or so quite a few have gone on to be unicorns. But my regret is that looking back, I should have perhaps held on to them longer, and I should have trusted my instinct about the fabulous people I was backing more. So that was my big mistake. And then I've made a few mistakes with companies that I should have backed that I didn't. I can think of 2 big ones. I won't say the names, but one of them we were about to back. It became a unicorn. I was about to back. And just on a week before our investment, 2 brothers who founded it fell out of the blue. And I said, well, I can't be involved in a business where 2 of the founders have fallen out. And so I said no, but they went on to do very well, without me. They did very well. They went public, so that was a big mistake. And so there have been a few like that I've missed, but most haven't got away, but some did. And then I think a problem that I mentioned earlier was trying to invest remotely, trying to invest using investment committees where I wasn't meeting management and the people. That was a mistake, and trying to build up a massive investment machine, because once you let it out and delegate, you lose that personal touch. And so that was a mistake. But I'm sure I made lots of other mistakes as well.
Yeah, that's great. Thank you for that. I really appreciate your answers there.
Okay.
It's great to see you. Are you doing okay?
Yeah, doing good. Yeah, just always wanting to learn more and keep progressing. So I love these events because just one little thing can really shift your thinking to a whole nother level. So yeah,
you've obviously done well. I like your home office. That's lovely.
Oh, his turnover is well over 100 million. So I'm sorry I've just given that away, but he's done well.
Thank you.
So,
Me too.
thanks, Avnish. Thank you very much. Yeah. And we'll come on to the next person, I think. Stephen, who are we bringing on? Well, if we're bringing somebody on, can I go and ask you your next one? It's one from the audience, really. Can investment bankers be trusted to do what is best for a company?
The relationship with an investment bank is very difficult because you have to remember that you are just the next deal, and they will be making their money, their sales side will be making their money going back to Schroders or Legal and General or the Pru or Fidelity or whoever, over the years. So that's where really their bread tends to be buttered, and you're just the next deal. I'm not saying they're all like that, and they do obviously care, but they're far more concerned overall with how they look. Am I a good look with my institutional investors? Than for a small, rising company, they might at the last minute dump you and say, well, actually the market's no good. And then you've got virtually no comeback. You're stuffed, and you've invested maybe £1 million, £2 million in coming to an IPO situation. And suddenly they say, oh, sorry, no, the market's no good. We don't think it's quite right. They haven't got enough demand. And it happens quite regularly. I think so. You need to be careful that they're really, on your side. Some are, but some aren't. But when I was an investment banker, I always used to think like the entrepreneur, but some don't. And maybe that's why I get on better with entrepreneurs nowadays, because I always used to see things from their point of view, not so much from the big institutional investors.
Well, you have a massive fan in Sharon Walter Ferguson of Hardly Ever. She's been one of our members right from the beginning. So I know what she says about you. So Tom, that says you're definitely aligned to entrepreneurs. I'm going to move over, if I may, to Emma Hartley. Emma, lovely to see you. How are you? Just unmute yourself, I think.
Is that better?
Hi, Emma.
Hi. Yeah, I have a question which is really specific, for which I apologise. I've been trying to figure out all day whether the ARC company that you invested in is the content management system that the Washington Post uses.
No. It was a chip design company designing chips in software, and there have been quite a few companies called ARC. It was Argonaut Risk Cause was the name, and it came out of one of the first companies I backed. Actually, all those in the 90s was a games company called Argonaut, and they made games like Croc. And one of the things they designed was a very fast accelerator chip. It was the biggest selling accelerator chip on Nintendo, and they then developed that business, and we floated it with Goldman Sachs. But that was a long time ago. Then it morphed, and then it got sold, so it's no longer an independent company. So it's not that one. There are quite a few ARCs around.
Apologies, I was looking for a link somewhere to the website, but there wasn't one. So, okay, thank you for answering my question.
Pleasure.
Yeah.
Thank you. So another question: educational background. For entrepreneurs, do you look at their educational background? Is that important?
Not really. No. I don't. It doesn't really bother me. And sometimes the fact that they have an MBA is a slight issue, because they tend to think too much in terms of logic. And a lot of things in the entrepreneurial world are not logic at all. They're more emotion and vision. And so, and if they think too much, I'm not saying MBAs are bad. And I do like to see entrepreneurs being able to understand balance sheets, P&L and cash flow forecasts. But it's amazing. A good entrepreneur will learn that. I've found that great entrepreneurs will learn that. They'll learn the legal niceties of contracts. Guys with absolutely no education become amazing at spotting naughty bits in contract about, doing cash flows. So I don't really think about the education too much. And I've seen people who studied ancient history, Chinese, do really well. Mathematics, you might think vital, but not in my opinion, not really. But they do need to be able to understand a balance sheet and the P&L and cash flow projections, which, as I say, they usually get to understand quite quickly day to day. Yeah.
Yeah, it's very interesting because a lot of the entrepreneurs that we meet, they're dyslexic, but they're hungry. So it goes back to what you said in the beginning, Tom, is that they've got the clout, the interest, the hunger to run their businesses. So it's kind of very aligned to what you said earlier. So I'm going to ask Nitin. Hi, Nitin. Lovely to see you. How are you doing?
Hi. Good. Tom, good to see you again as well.
Good to see you.
Hi, Nitin. How are you?
Good. So ARC actually IPO'd in September 2000, so 20 years ago. Which
exactly.
A good one.
You remember it.
It was a good journey. So I actually wanted to ask, because I was part of that team with Rick and John Edelson. And
it IPO'd for 500 million, I think. Yeah.
$1 billion, actually. It was $1 billion. So it was a good one. I got sold to Synopsis just for the purpose of the other lady who just asked the question. But what made you look at that as a games company in the beginning? I'm curious. Yes, with Argonaut actually before that.
Very, very simple. So I was introduced to it by a guy who worked for the Daily Mail. He said, you have to meet this entrepreneur, Jez San, because he's really, really bright. And I met him and I was absolutely wowed by him. He started his business at the age of 15 in his bedroom. He couldn't even have a company. He was so young, but he was an absolute genius. And the way he expressed himself and the way he learned stuff and the way he did contracts, he was just a natural, and he's done very well ever since then. So that was the reason. I believed in the games business. I thought that would grow. The online, I didn't realize it would grow to where it is now, because in those days it was all on CDs, floppy disks. And it wasn't like now where it's online, massively multiplayer. But I was just impressed by the guy, and so I put my own money in, very quickly. And I actually used to go up there a lot and help him, and brought in investors. And then I was involved with the IPO of the games business and ARC, which was the chip accelerator business, the chip design company. Yeah,
that's so when I got involved. Yes,
it was the guy. Yeah, lovely to see you, Nitin.
Yeah, good. Well, thank you for that. So
pleasure. One small story. When it IPO'd, the price opened at twice the issue price. It went flying.
£4.57. I remember it well. I remember the IPO and the party as well.
It went flying. It absolutely went flying. But in the end, it was a hard challenge, and it got sold.
I did the mistake you mentioned. I didn't sell enough shares at the beginning.
Exactly. Yeah. Okay. Thanks, Nitin. Lovely to see you.
Thank you. Bye-bye.
Nitin, take care. And Walter, lovely to meet you. We haven't met before, so thank you for joining us. You just need to unmute. Yeah.
All right, unmuted myself. I didn't know if I'm in the right place, because actually I'm just chairing a charity, and we actually can't even accept any sort of social investments. We can only go for donations and for funding, and we are a social enterprise, and we're doing like writing and publishing, and we are based in the UK, Bristol and Glasgow, with a publishing branch. And but we're trying to get all ready for the next year as well, because we have got the GOP 26 coming up then. And what we do is just providing a lot of sort of opportunities for people who are actually try to have a voice. And we get homeless people to write about homelessness, and or people who have been victims of abuse to write about the abuse. All sorts of stories, like all these really sad stories. We actually got sad stories, but also people who actually come forward, you know, and actually grow. Then a lot of us sort of have disabilities, have mental health problems, you name it, you know, lived experiences. And we were founded by a person who was in prison for a long time, and he started to write his first books in prison. And then when he came out of prison, he couldn't get any publisher. So then he created Ackborn Publishing through just the Prince's ways of race trust, really, in the beginning. And then he was able to get his own books out. And then from then onwards, we started. I came on board to become a trustee.
It sounds great.
It's something like coming out from nowhere, out of the dark, but at least we are there now. But
how can we help? What's your question?
Yeah, the main thing is, I don't know, I mean, we couldn't take any social investments. I mean, we'd love to get people on board, actually, or businesses on board as well, to sort of go and invest into us, in Ackborn Foundation. But
then why don't you send Shalini a mail, and then I'll discuss it with her. That would be the best thing. Send her an email.
Yeah, if you send me your email contact, I can send you one. And
thank you.
Hey, thank you.
But at the moment we are actually nominated as a social enterprise, want to watch and everything. But it's difficult to Okay, thanks. But it's great to listen to you.
Yeah, we'll see how we can help you. But well done for the work that you're doing to help people in difficulty. So well done.
Yes, and I mean, I have my own. I mean, I do everything which I can myself. You know. Yeah.
Thank you very much. Thank you. Lovely to see you.
Yeah, thank you.
I'm going to say hi to Andrew. Drew, lovely to. Good. How are you doing?
Shalini, hi. Lovely to see you. Tom, hello. We met 20 years ago. I don't know if you remember. I was
very well.
I think I came to you and I pitched you a Formula One website that we just built, and which actually resulted in Mr. Eccleston ringing me up and telling me that I couldn't do it. But anyway, I just wondered what your thoughts were on the current slew of online conferencing platforms, really with relation to Hopin, which obviously recently did the most incredible series of raises. I don't know if you're familiar with that, but they built this platform in August last year, raised 6 million in February as a seed round, then raised 40 million in July, and about 2 weeks ago raised 125 million, valuing them at 2.2 billion within 18 months. Do you see this as a bubble, or do you think that this is an industry that is going to grow further?
No, it's going to grow further, but people like Google and Amazon and Microsoft, I mean, they're in there. So, and Zoom, obviously, which has increased in value vastly. Hopit, I don't know very well, but it's a rolling bubble. Yes, I think it is a bubble, and I think that some of these businesses are going to end in tears. It's the usual thing, you know, when people pile in, there'll be too much capital chasing too little business. The marketing costs will climb. And then in the end, they won't be sustainable. I think that's how it'll end up, because there's a limit. But the interesting thing is there's so much demand right now. The question is, when will the limit come, and will you be able to invest and then get out before it slows down and before it's hard? You know, right now, the business model for Zoom, I'm not quite sure what it is, but for Microsoft and for Apple and all these other guys, they've got a business model related to their other products. But how you can independently survive for many years, make money and exit in this kind of company is quite difficult to know, you know. Yeah.
It wouldn't surprise me if they tried to IPO in Q1 next year, actually. And then,
yeah. I mean, you know, if the market's hot and everyone loves this stuff and they hit it at the right moment, they got the right investment banks behind them, and the founders have the right charisma. It's quite possible. It's quite possible it can happen, but when they do their cash flow forecasts and the analysts start looking at it. So I chair a company called Edison Investment Research, which does research on public companies. You know, when that kind of research gets done, will the analysts really believe what is written in the cash flow forecast and the profit forecast, because in the end, the chickens come home to roost. If you can't do it, it's going to end. They won't be dividends. They can't pay their loans back.
Was it Warren Buffett said, when the tide goes out, it's only then you can see who's swimming naked? Yeah,
absolutely, completely agree with you. Yes, although it goes in and out very fast in tech. It does. Yeah, very, very fast. And when you think Nasdaq fell from 5,000 in 2000 down to 1,700, it's incredible, and now it's back up to a huge number. So it's very, very volatile. So you need to pick your moments.
I remember it well, yes. Well, listen, I'd love to reconnect, Tom, so I'll drop Shalini an email and perhaps we can...
Great, Andrew. Lovely to talk to you.
Thanks very much, likewise.
Great to see you, Drew. Welcome, Suruchi. And after Suruchi, I think we have Michelle, Richard, Leslie, Nina.
Did we just lose Shalom?
We did. Hello.
We did.
Hi, Tom.
Nice to see you. Hi. We can carry. We can still be back. We can carry on, I think.
Perfect. Well, then I'm going to dig in with my question. I actually am a very, very novice entrant to the startup world. I think I'm a slew of many that gave birth to a COVID startup called Curious Campus, which aims to operate in the edtech space. And my question for you is to very, very young amateur wannabes like me, what would be your advice for customer acquisition on an unfunded startup, but where we think we've got MVP and we've got validation of our concept, so we want to proceed, we've got the hunger to proceed, we're currently unfunded, but really now need to start going out there and grabbing customers on a shoestring budget. What would be your advice to newbies like me?
Yeah, use social. That's the best way. If you haven't got that much cash right now, and start getting the word out there. If you're already getting are you getting revenues already? Anything?
Yes.
Okay, well, that's crucial. And if you've got some revenues, then I would look around for some EIS investors. You know about SCIS? SCIS is early stage EIS, first £150,000 a company raises. The investors get virtually all their money back if it goes pear-shaped. So they're great people to go to because it reduces their tax if they invest. That's where I would go, to friends, family who have that kind of money. And then EIS, it's a British company, right?
Yes,
is it
Curious
British?
Campus is British, yeah.
That's what I would do. So try and convince some people who are close to you to put some capital in, raise 150, 200,000 and start seeding social and see what happens then. I mean, you can't do big branding campaigns, big ad campaigns, but you can do social and you can do networking. That's what I would do with the first bit of money, apart from the tech work that you have to do. I guess that's already done.
Yeah.
You've already got a product. You've got an MVP. Yeah. Yeah. Okay.
Yeah.
Oh, good. So that's what I would do.
All right.
Yeah. Don't go.
Thank you very much.
I wouldn't go to banks, and banks won't invest in this kind of stuff, but family and friends will, and it's often the way to go early on, especially with a tax advantage. Okay. Pleasure.
All right. Absolutely agree with what Tom said. Also, have a look at accelerators. There's some really great accelerators out there. If you can join, like a Goldman Sachs 10,000 Small Business Program or one of the programs, Richie, these will help you as well, because you get and Brent Hoberman's running Founders Factory. So yeah. Have a look at those sorts of organizations who give you financial backing plus training, knowledge, and technical know-how. They do a lot, so have a look at those.
And often you're in the office environment with a lot of other startups, so you can get techie advice, marketing advice, and find cool people. It's a really great thing to do. I agree with you. For a very early stage company, but there's quite a bit of work getting their attention. Just getting in there is not that easy. But if you've got something which is a start, then they're looking for deals. I mean, that's what they want to do. They've got capital and they're looking to do these deals.
Absolutely.
Brilliant.
Well,
but it's
both of you.
It's a hard flog. You just have to be persistent and keep going and don't give up. I told you a story earlier about it took 300 calls to British Airways to get last minute to get some stock from British Airways. That's the kind of attitude you have to you have to have. Never give up. Just keep going.
Yes, no, I can totally relate to that. Trust me. So thank you.
You're so young, so keep going, Sruchi. That's it. And so thank you very much for your question, Tom. Great answer that you gave. Great advice there. Thank you very much. Richard, lovely to see you. So we have a partnership with Richard's business. If you're looking to reduce your costs in technology, this is the man to talk to. His business is called a sourcing hub. So I've done your little intro for you, Richard.
Yeah, thanks, Shalini. Thanks also for putting on the event again. Great content and absolutely spellbinding from Tom. So really interesting and good to meet you, Tom. As Shalini said, we work with businesses in the UK, scale-ups and startups who are looking to kind of drive down software development overheads. We've got a portfolio of around 25 companies, Eastern Europe mainly, couple based in Budapest actually, and really.
That's where I was born, Budapest.
Yeah, well, I know, so I thought that might catch the eye. And as you probably know, very deep talent pool in Eastern Europe, and obviously development is extremely high quality. But it was more a question or a comment from you, Tom, about the kind of investor community. We work with a lot of VCs and private equities and kind of entrepreneurial accelerators and that kind of community. It's always interesting when we approach the investor sort of community. It's almost a sort of 50-50 split between businesses who are very hands-on and some who are in terms of management of their investment portfolio. And we have almost the other half treat it as a purely transactional kind of arrangement. So often when we speak to a VC, we'll say, look, you know, are you involved operationally? And they'll just say, no, we'll chuck in the money. We know 99% will fail, 1% will become Dropbox or whoever. And then and we're just relying on that, whereas some will become very hands-on and involved. I suppose the question is, in your mind, what's the sort of perfect blend? Do you get very hands-on with your investments, and if so, how do you what do you do operationally?
Yeah, usually we do get very hands-on, especially in the early days. Usually, me or one of my partners goes on the board. You know, we often chair the company to give it direction, help form it. So we're pretty hands-on, but there are people who spray and pray, but we're not like that at all. You know, I like to have a personal relationship, what my partners do with the founders. You know, really mold their path, help them in making decisions about people, about pricing, about fundraising, about going public. You know, there's a lot of stuff. So I don't really believe in the spray and pray method at all, not at all. But I know some people do it, and sometimes they hit lucky, and they'll do okay. But I think our hit ratio is much higher than average because we don't do it that way.
Yeah, that's good. That's good to hear. And in that case, I'd love to get in touch. So perhaps Shalini,
sure.
we could
delighted. Well, yeah, I spend most of my time at the garage Soho, just opposite the Groucho. So we're easy to find.
Perfect.
Hi, Nina.
Hi, Nina.
Hello. Thanks for this
Nina.
Awesome event. How fun.
Thank you. What's your question?
Oh, my question is, so I know that the garage Soho is based in Soho, which makes sense from the name. So my question is, does Tom think it would be cool if there was a system to connect all the people in Soho at the same time? And then, you know, if something like this existed as a tech product, potentially like a chat service, you know, could you see an opportunity for brands to also kind of engage with these people, you know, through this service? And then this kind of links into another question around venues, and if there is an opportunity for a tech product to basically engage people who are in the same venue at the same time, with the aim of like boosting serendipities in cities, around geographies and clusters where like-minded people kind of gather to, you know, potentially improve city life and kind of.
Yeah, I think it's really good idea. And a guy I mentioned earlier, Michael Acton Smith, he founded a thing called First Tuesday.
Cool.
Yeah, yeah, we had weekly get-togethers, and it was great in the very early days of the tech revolution. He used to have drinkabouts, and it was a great way of doing it. But Soho is a brilliant area because it's got the highest concentration of creative talent in the world, in that area of Soho in the world. So it's a great place for people to connect and to grow. And I think setting up regular meets is a good idea. Of course, it's difficult right now, but the time will come again when we'll be able to do it in Soho. Yeah.
Yeah, I just wonder if there is like potential for a tech product to basically engineer, these serendipities within locations and clusters that is currently like an untapped opportunity. Because I feel as though there isn't enough being done in the location tech space, and I think there might be an opportunity there, but I don't think investors are really looking there, which. I wanted to know if you see an opportunity.
I think to make a lot of money out of it, it's quite difficult because it's a very micro product. You have to go, street by street, person by person, and you're not suddenly going to spread across the world unless you set up a really good model like Neighbor. I think there's a Neighbor product which works all right but not great. So I think logically it should work because everybody feels much more comfortable about selling a car, providing a service, something to someone around you, or joining up in a business. It's a natural human thing. So I think there are legs in the idea. The technology certainly exists nowadays, but it has to be very well crafted so it doesn't come off as cheesy or dangerous. Or because I'm on some of these neighbor sites. And I don't live, and I get things from 20 miles away. They're not my neighbours at all.
No, they're not.
It's not properly sorted. The Soho is obviously a gold mine of talent.
Yeah,
is absolute gold mine. If you could harness that. In fact, my business partner, Sir John Hegarty, he's been chairman of the creative union, the creative effort in Soho sometimes.
Wow.
And somebody I backed years ago, Martha Lane Fox. She's Lady Lane Fox of Soho now.
I think Baroness of Soho,
yeah, Baroness. So I definitely, and I work there every day. So I think it has a huge prospect. So yeah,
you might see some stickers around.
Good. That's how it starts. So that's how Airbnb started. They all started with the stickers. But Soho, you've got the right ground for it. And now people are out there, thinking what next. So it'd be a good idea. So let me know.
Cool. Thank you so much. Thank you so much. Really exciting. Thanks a lot.
We're going to try Michel now, but I've got a feeling his mic's not working, Stephen. Michel, will you try to see if it's working? No, it's not working. Okay, let me ask you a question. So he sent me his question. Tom, he's asking, what's your most recent investment and how can he pitch to you?
Right. So our most recent investments are a company called Popsa, which does photograph albums. It's growing crazy. It's going like crazy. Another one is one called Simba Sleep, which is mattresses. So mattresses in a box, which was is a booming business. It was, and it went downhill, but it's revived, and we've stuck with it. It's going really well now. And another one we've done really lately is called Charged Up, which was for recharging your phone in pubs and restaurants, but it's now completely flipped to something called Cleaned Up. It's the Up company now. It's changed from Charged Up to Clean Up, and that's doing really, really well. I won't talk about the difficult ones. We have got a few, but there's some of the more recent ones we've done on Doctify, which is a trust pilot for doctors and hospitals. That's doing pretty well, and so. That's a range of some recent ones. To pitch to me, you just send me an email. Nowadays it's not very difficult. Send me an email, Tom at the Garage Soho, and I've got a team who help me, look at stuff, and then we'll be back to you in a few. We'll look at it, think about it, and come back to you with a proposal. But we're not like the average investor where we just put money in for shares. We also want to keep some options on the future growth of the company. So we'll put some money in, but we want options on the future shares of the company, so that if it goes public in 5 or 10 years with our help, we get the chance to benefit from our input as well. So we're not like the average. Not many invest in VCs do that. but we're very added value in terms of brand advertising. We have a whole advertising side of our business and branding side, which really helps new companies, apart from the experience we've got in venture capital. So just send me, it's fine.
There you go. So you can pitch to him there. We will take off commission. Tom, don't forget that bit. E2E's commission. Michelle, I'm sorry.
I'm not paying it in advance though.
No. Once it's done deal. So Michelle, we'll talk offline and we'll make the introduction. But your idea has to have that gravitas that Tom's looking for, and you need to be massively tenacious. So. I hope next time you'll join us, Michelle, but really good to see you. And thanks for joining us. I'm going to move over to Louis now, if I may. Louis, hi, how are you?
Hi guys, how are you? Thank you so much for this event. This is actually my first, it's my first time on one of these, so really nice to be here.
You're doing great.
Tom, actually. Yeah, thanks. So Tom, we're a company called Sapience Communications. We're sort of like a communication strategy consultancy, and one of our clients is actually Edison Investment Research.
Oh, right.
So
I've heard the name. Yeah, absolutely.
Yeah. So you touched on with Saruchi, I think her name was just now, on kind of how communications is kind of important for startups and sort of to invest in those. I thought maybe it'd be interesting if you could speak a bit more on maybe some of your experiences or the value that good sort of communications and a brand strategy is for a startup. We do work with quite a few startups. We have at the moment actually a COVID tester startup as well. So yeah, I think that'd be quite a valuable bit of information from you.
So nowadays, the limiting factor is no longer the ability to spend a lot of money on technology. Those days are over. The technology is there. You can create a pretty interesting app for 50, 100, 200,000 pounds, or even less if you've got friends who'll do it at mates rates. So you can get going and out into the market quite quickly. So what makes you outstanding? It's the message, the way you give it, the way you get the PR, and if you're going to do above the line advertising or below the line advertising, which is much more expensive, or TV advertising. These are all things that can come later. But at the beginning, what you need to do is to have a clean brand, an elegant brand, the way you express yourself. Your point of difference is crucial. What's your point of difference? Because there are, like with our business with mattresses, I mean, ours is high tech with springs in the middle, and none of the others foam mattresses have that. And it comes in. So you have to emphasize your strong point, early on, and pick on it and stick with it and keep changing as times change. But you can't be generalist. You've got to be very good with the brand.
Yeah, we've definitely seen with
easier said than done.
Yeah. Of course.
And again, my business partner, John Hegarty, he created the brand, the ads for Levi's and Audi, or lots of Johnny Walker, lots of famous ones. And it's kind of, it's ephemeral. It's not, it's like, how does someone compose a good song? And you can't really write it. How do you get great investment? But you have to have a vision and stick to it and make it clear.
Yeah, we've definitely seen with a lot of our clients who are in that sort of startup phase or doing sort of seed rounds and other rounds of funding. Definitely unique selling points obviously is always something to emphasize, but yeah, it's definitely an important part of, I think, the initial growth of a company, to get that messaging right, which carries forward in the long term as well. So
but
yeah,
it has to be in everything, in the way you have your teacups in the office, in the way you present your deck. It has to run through it clearly and nicely and elegantly. And your deck shouldn't be too complicated with 20 lines a page. Should be 5 points a page, 10, 12 pages. That's it. And that's what you really need. And then the rest you talk. But that brand, that vision, that style has to go through it. And if you have pictures, like we've got a company which are doing very well actually. It does high-end jewelry, but in some of its pictures, it looks like they've been taken in the office of NatWest. They don't look good. And so you have to carry the theme, the elegance, the spark all the way through your presentations, your product, in the way you're on Instagram, or you're on all the social networks. You have to really carry the brand through. Be ruthless with that.
Sure. All right. Thank you, Tom. That was brilliant.
Easier said than done again.
Great question, Marie. Thank you. I'm sorry we've run out of time. It's 7:15. So guys, I know there's lots more questions. I want to say thank you. Julie, I know you've got a question. Julie's quick question, Tom, is how to get trustees into a business rather than investors. I don't know if you've got a quick tip on that. Then I want to say
trustees.
Trustees. Like,
you mean people who are looking after your trust fund? No,
as in people who donate to a charity. How do you attract it? Because is it a similar philosophy to raising investment?
They're usually much more cautious. If they're trusts for a family, if they're trustees for a family trust fund or something like that, or a pension fund, they'll be too cautious because they can't afford to make losses. It's very difficult to get them to come on board. They're not the sort of people that usually invest in this kind of thing. I would steer clear of them. Not because they are great people, but they're just not in the business of taking high risk.
Fair enough. Thank you. Thanks, Tom. I'm going to say thank you. I know there's quite a few of our advisory board, Nish Goyle, Philip Maskell, Craig Goodfellow, so many of our advisory board, they've got questions, but they'll understand we've run out of time. So it's really nice to have so many people. We had about 200 people register on for tonight. So thank you.
How many have fallen asleep? That's what I want to know.
I don't think so. There's still hands are going up on the chat function, Tom. So I'm really sorry, everybody, that we've run out of time. I want to extend my massive thank you because, Tom, I've learned a huge amount. This is the first time I've got to experience you and what your life has been like, and congratulate you because you've helped to create so much employment by backing these businesses. So you've been a real change maker for the UK. And you're always sharing your knowledge and giving your time freely. So thank you for that. And I would love to take you up on a drink one day, considering you live near me. Yeah. So we'll definitely do that.
We both live in the Islands.
Yes. And,
lovely to see you all. Thank you very much.
Thanks, Tom. And so thank you very much. We're going to share the poll. Stay for a minute. We're going to share the poll. And thank you very much to Richard Morris, to IWG for all of their support in every way possible.
Yeah, thanks.
Yeah, thanks, Richard. And finally, I'd like to say a huge thank you to my team. I come and do this, but they run the show behind the scenes, so I couldn't do it without my amazing team. So Stephen, thank you. Sean, Dana, Urdu, Ismail, Chetan, Aaron. I'm not going to name everyone. There's 30 people, so I just want to say thank you to them. Quick results. Why are we interested in E2E? Because the events are very informative and this is what you want to continue valuing. So I'm not going to go through everything. Number 2, what services would listed below would you need the most? Meeting like-minded people always is the number 1 here. Number 3, which of the following services would you benefit from most? Market intelligence data, that's the winner there. Number 4, what is your key challenge in digital marketing? Not enough budget. Guys, I need to raise money. Talk to Tom. Are you interested in practical and structured digital marketing training? Most people have said no, so that's interesting. Would you benefit from discounted access to virtual office packages and physical packages? 21% of today's audience have said yes, and 79% said no. That was opposite on the last one, so it's quite interesting. Are you interested in discounted membership to the Confederation of Business and Industry? 32% have said yes, 68% no. When do you think you'll be able to attend an event later than Q1 next year? Okay. And are you prepared for Brexit? Wow, 93 people have said yes, you are prepared for Brexit. And are you prepared for a possible no-deal Brexit? So that means our community is ready. So that's encouraging. It's a really nice way to end this event. We've got lots going on next year, and Richard and I are working on the program for 2021 as well as with our other partners. So we will be back soon, and hopefully, if we're allowed, we'll do something fun over Christmas time to get the community together, online probably. So have a nice evening, Tom. Thank you again.
Brilliant. Thank you very much. Thanks. Bye, everybody. Thank you.
Bye, everyone. Thank you. Bye-bye.